is whatever. What can you tell your kabayans about how your Friday went or how your week went? JB's team is now Team BB Love Me. Oh, wow. Ang creative naman ng name. Love Me. Luz Viminda ba ito? It's nice, JB. Um, and I notice everyone's really being very participative in the chat. Minsan hindi ako nakaka-chime in kasi medyo ang dami ng notification. And again, I'm also really catching up on work. But as soon as work slows down, I'm gonna go to your GC and be more participative. I also heard from Kelly that Cherry and Shawnee's team, or I think Shawnee's got a sibling in the US who can help them get an even and be able to file returns, which is awesome, right? So if you guys are in Shawnee's team, baka magsilipatan kayo lahat ha. Parang si Cherry ata ang gatekeeper ng Team Shawnee. So I think they're making so much progress kasi if they are able to obtain even and Shawnee, Cherry, and all others are, and I heard I've read that there are several tax preparers already in Shawnee's team. Again, which is awesome because if you guys are thinking of preparing returns for your clients next year, then you can already do that, right? End-to-end process from preparation, review up until filing, you can do that because there's an EFIN. That's very important. You cannot get a tax software without an EFIN. And another good news is that I come across someone other than oh my God, what's going on in my head? Oh my God, I'm overworked. That's why. Other than Christelle, I got to meet someone who also has an EFIN that we may be able to use if you guys decide to connect with me in terms of preparing returns for your clients. Okay, so we can also use that for next year. So you guys have a lot of opportunity, right? So what opportunities I'm talking about. If you're a bookkeeper, you can convert your bookkeeping clients as tax clients as well. If you're someone looking to get employment as both bookkeeper and tax preparers, sometime in November and December, you will be ready by then, right? You're gonna have an edge over others who don't have tax preparer knowledge and training. Or another opportunity that I'm thinking of for you is that you can go out there and actually look for your own client, meaning you don't have to have a firm. You can go out and look for clients who you can prepare a personal return or a business return, and and then we can file it. You can connect with me to get the EFIN and get that e-filed, or you can connect with Shawnee when they're able to get that EFIN. So much are in store, right? It's just gonna be a matter of time before you guys are gonna become a real U.S. tax practitioner. And I know we're talking about bookkeeping in this session, but the reason why you're here is you want to upskill yourself, right? And you don't want to get stuck as being a bookkeeper, right? Elevate yourself to eventually become bookkeeper and a tax preparer at the same time. And maybe over time, you will focus on tax strategies or tax representation, which is a more of, kung sa bookkeeping may niche, parang niche din yun ng tax practitioner, right? Wherein you can charge a good amount of income, konting clients, but malaki naman yung single mo sa client, kaya kahit isang client ka lang, buhay ka na ng isang taon, right? It could happen. It could happen. I've seen that, and I have clients who are doing that. So it could happen to you, but step by step pa lang tayo before tayo sumakses. Okay? So, laban lang, right? Melissy, laban lang. Right. Productive, everything. Yeah, productive. I feel productive too. This week gone so fast. Like it literally like just flew, right? All right. Another thing I would like to share with you tonight is about feedback mechanism, right? So now that we have groupings, I would want to for people like you guys share feedback wherein that would help us improve our course, right? So if you have anything you want to add, you want to, you know, change, or things that would make the course and the experience better, please reach out to, excuse me, to your TL, and so your TL can reach out to me and say, "Hey, Chris, there's a suggestion about this, and we think that this is really good. Maybe we can do this moving forward, right?" And that's how we can improve our course, right? Because we're doing it for the first time. And with anything, there are birthing pains, there are lessons to be learned. And if we open ourselves to, I would say criticism or evaluation or feedback, that's how we will get to improve, right? Again, if you guys have any ideas that will make this course even better, please reach out. You can reach out directly to me too. I'll be very responsive if it has something to do with BA, or if you feel like you can reach out to your TL, then that could also be a good idea. Okay. So again, if you have feedback, suggestions, comments, reactions that you would want to um, get done to make the course and the experience better, you are very much welcome. All right. Am I making my point across well? Do you guys understood what I just said, or was I vague? Was I clear, or you didn't understand it at all? Anyways, yeah, reactions, guys, are important because I don't see you, right? So if you are reacting, commenting on the chat, putting your react button, activating them, not only that you're being interactive so you don't get sleepy, you don't lose focus, it also really brings, I would say, a little lighter on my part, right? Because I feel confident that you are able to follow my thoughts and in my words and whatever. Okay, so let's be interactive as much as possible. And then one last thing, in the welcome center, is it okay, TLs, if I add you into that GC so that you can look into those that are still there that don't have a TL yet or a group yet? Because the goal for the welcome center is that it becomes I mean, the people there will leave the room because they already have a team, right? And not so many people are smart enough to follow instructions. So I noticed a lot of several people, they join and they figure out the instructions inside the GC, and then they leave. They leave because they already have a TL. But there are still in the morning I checked, there are still 17 people that are still there, and I asked if they already filled out the accountability group sheet, and they said yes, but still they're still in the room, probably because they have not been welcomed to a room or they have not been invited to a GC or whatnot. So if I may ask the TL permission, if I can add you into that GC so that you can also check who you can invite into your team if you still have the capacity. Okay, because we don't want those 17 people to be stuck at the welcome center and not be able to join a group and continue to get lost, right? So I hope that you don't mind. If you do, just let me know. Right? All good. Everyone's good. Everyone's okay with that. All right, now, so I guess we can start unless you guys have anything to say, anything that you want to bring over to the floor. You have 1 minute. Otherwise, I can start. Are we good? I think we're good. All right. You guys are seeing my screen, correct?
Yes po.
Thank you. Just bear with me one sec. Let me set my screen up. There you go. So for tonight, we'll continue where we left off. I think we're done with the second step of the accounting cycle, the recording and uh, posting of the transaction. So we're moving to the third step, which is the preparation of the unadjusted trial balance, correct? Right. All right. So again, we're still on the first step. It's already 12th of September. Hopefully,
Facebook or kaya sa YouTube live.
wait lang. May naka-unmute yata sila Cherry. So, mute muna natin sila. Okay, naka-mute na pala. Okay. So, let's continue. And again, I'll try to make it a little faster, okay? So that mahabol natin yung 30th na target natin na matapos natin yung entire course. Hopefully, para again, we can start with the business tax preparation course. I'm excited for that. Are you guys excited too?
Yes, we are.
All right, nice. All right, so now we're moving into this, the third to fifth step, right? The preparation of an adjusted balance. Ano to? Unadjusted balance. Diba? Again, clerical error na naman. Prepare unadjusted trial balance. Ano ba yan? Diba? Tapos adjustments and adjusted balance na naman. Bakit walang trial balance? Diba? Recharting nga si QuickBooks. Pa-proofread nila yung contents nila. Right? So this is prepare unadjusted trial balance, adjustments, and adjusted trial balance. Right? To make it better. So preparing the unadjusted balance, ano ba yan? Consistent talaga siyang balance. So preparing the unadjusted trial balance, making adjustments, and preparing the adjusted trial balance are vital steps in the accounting cycle. These steps help to ensure adherence to accounting principles, accurate matching of revenues and expenses, and overall financial accuracy. So estimated time nito is 16 minutes. Hopefully matapos natin within today. All right. But of course, you're welcome to ask questions, do interjections if it's necessary. Okay. So we will not compromise learning over speed, right? So these are what we're going to be expecting tonight, the introduction, the learn and practice of the steps 3, 4, and 5. And then we'll have a summary and then the conclusion, right? So let us get started. So adjusting for balance. In steps 3 to 5 of the accounting cycle, we focus on preparing the unadjusted trial balance. So, tama na siya. Making adjustment or adjusting entries and then preparing the adjusted trial balance. So if you look at the cycle, done na natin yung 1 and 2. Now we're tackling step number 3, then 4, and then 5. And then eventually we'll conclude this session with the step 6. Tik na. All right, the bookkeeping glossary, we're going to skip that. Then we'll move on to the second part of the lesson. So preparing the unadjusted trial balance. How does this work? So the unadjusted trial balance provides a list of account balances from the general ledger at a specific date before any adjustments. It summarizes balances by focusing on total debits and credits, providing a snapshot of the account balances at the moment. The name unadjusted simply means it's prepared before making any end of period adjustments. Again, an end of period adjustments because it could be end of month, it could be end of quarter, it could be end of year, right? So as you can see in the example that follows, the unadjusted trial balance contains the account name and opt-in account number and the account's natural balance, whether it resides on the left or the debit side or right side or the credit side of the accounting equation. The totals of the debit and credit columns should match. If they don't, there may be errors in the recording or posting of transactions. So this is an example of a trial balance. And if you look at our working file, we already have trial balance, right? So if you go to TB sheet, this is our trial balance, right? So you have here your account code, your account titles, and then you have your debit side and then your credit side. That's typically what a trial balance is, but we added a total column, which is not necessary. And then you have to look at the bottom line. The totals of the debits and the totals of the credits are matching. Again, if they are not matching, something is wrong with your journals, right? With your entries. Let's show that. If your transactions are erroneous, let's say the 500 on the cash and bank was recorded as 5,000 instead of 500, but then your service income is recorded as 500 correctly, your trial balance will now be in balance, right? So you have more debits than your credits, right? So that's, see our validation, it's not zero, so something is wrong because there's more on the debit side than on the credit side, right? So that's your trial balance. If you make a mistake on any of your transaction, it will have an impact on your trial balance and ultimately on your financial reports, right? So that's why you have to be thorough, you have to be accurate in terms of your recording. And when you are not thorough, you're not accurate in your recording, it can get caught in the trial balance, right? So the trial balance help you determine if there is any errors in your entries, right? So are you able to follow so far?
Yes
So
po.
step 3,
Yes
prepare
po.
the unadjusted trial balance. You finish entering transactions, so you finished entering the transactions and posting them to the journal and must now prepare the unadjusted trial balance. This provides the first draft of financial information for the accounting period. Complete the interaction below to prepare the unadjusted trial balance. Try it out. So Frank's Car Detailing Studio just completed their first year in business. They are excited to see how the business has done. In the following activity, use the drop-down menus to select the appropriate account account totals, checking that the debits and credits are balanced. When you are finished, select Submit. Right, this is an exercise. So this is a pro forma of a trial balance where you have debit, credit, and then account name as the column heading. So checking has a debit balance of, or has a total debit of 12,010, savings 8,000, accounts payable 9,602, notes payable 4,000, equipment loan 30,000. So it's looking up for the total. So if your total credit is 43,602, therefore your total should also on the debit side should be 43,602. How do we now look for the balance of the accounts receivable? Parang finding your X lang to, di ba? Find the value of X if your Y, churva is this much, right? So parang ganun lang yan. So 43,602 is your total credit. You deduct the checking balance of 12,010 and then 8,000, then you will have your accounts receivable balance. Do you guys agree? So then, according to you, the balance is 23,592, right? Again, how did you find that sa mga lost? You have your total credit here, 43,602. You just simply might deduct the balance of your checking, the debit balance of your checking, and then as well as your savings. Then you have 23,592. So you prove that if it's correct, right? So you add 12,010, 8,000, and 23,592. These amounts should total 43,602, right? Are you guys in agreement to that?
Yes
So
po.
Yes.
it's just like that, okay?
Yes po.
Everyone able to follow or got confused or feels like it's too fast? Let me know, okay? Again, we're trying to be a little faster because we want to finish this on time. Are we good with this? 23,592 and 43,602 would be our answer.
Yes po.
Yes
Yes
po.
po.
And yes, we are correct. So great work. You have completed this activity. Knowledge check. Right. So when running the unadjusted trial balance, which should always be true? Right. When running the unadjusted trial balance, which should be true all the time? Is it that total equity debits will always be less than the total liabilities or credits? Not really. It could be true sometimes, but not all the time. Total assets, debits will always be equal to total liabilities. Not really, because you still have equity, right? So may not be the case all the time. So the total assets or the debits and the total liabilities plus equity credits will be equal. So this one seems to be the correct answer. So this is your accounting equation, right? Your total asset, which is your debits, likely your debits, not all debits all the time. And then your total liabilities plus equity, which is the credit side, will be equal. This is your accounting equation, right? So let's select this and answer. And I think everybody's in agreement as well. Let's hit that submit button. That's right. Both sides of the T chart of the trial balance should be in balance, with total assets equaling total liabilities plus equity or the credits. All right, mag-reflect daw tayo. Right, so parang ano lang to eh. I don't know if you have, I don't know, in high school we have religious education as subject. So we have reflection, like we have to write our reflection. I don't know if you guys have that experience. This thing reminds me of that. Anyways, so Frank, the owner of the car detailing studio, calls to ask if you can update him now before finishing the financial statements on how things are going for the business. Take a moment to consider what might change during the next step in the accounting cycle and how best to answer Frank. When you are ready, select continue. All right, let's hit that button. So, did you consider, before providing financial information, it's important to complete the accounting cycles, as there may be important adjustments needed. By skipping the crucial steps of preparing the unadjusted trial balance, making adjusting entries, and preparing the adjusted trial balance before running the financial statements, you risk providing incomplete or inaccurate financial information. Right. So you may ask, do we still need the unadjusted trial balance? Can I just go ahead and complete my financial statements even without the unadjusted trial balance? Yes, you can. Right. I demonstrated that to you before, where if you look at the transaction tab on our G sheet, these are our journal entries, right? These are our recording. We skipped the trial balance. We just directly went into the preparation of the financial statements, which is this, right? So did I have to go through unadjusted trial balance? Not anymore, right? So look at this, 50,700. Let's look at our financial statements. So it's not matching because, let's see, January, February. So we have broken this down into January and February. Our transactions don't have dates here. We have dates. But what could be the possibility why this is not updating as it should be? Just bear with me. Okay, 79 service income. Is it the same as what we have here? 79, 15. So if it's this 40, I promise I will make a point. Just bear with me. So why is my P&L in here not the same as in my P&L without using the trial balance? So let me just take a screenshot of that. Then I'll go to my transactions. I'll copy and paste that there. So what's wrong? 79 is the income. Taxes and licenses of 5,000. I don't have it. I don't have taxes and licenses. Oh no, the salaries. I have salaries. Then 6.8 for utilities, software 1.5, office supplies 24,000, depreciation 1,833. Okay, good example. This is really good example, right? Same source of reports, but different information provided, right? Different information. So if you go directly by recording, or sorry, by doing your kumbaga, you skip the process, right? In this example, we skipped the process. We didn't go through the trial balance anymore. We simply took the balances from the transactions, right? So again, from the recording and posting of the transaction, you skip the unadjusted trial balance, you skip the adjusting, you skip the adjusted trial balance, you went ahead to step 6. So you had step one, step two, and then you went ahead with step 6, right? Skipping 3, 4, and 5. You get what I'm saying? Can it be done? Yes, it can be done, but it may cause some issues in terms of accuracy, right? Give me 1 second. Why am I seeing a lot of drawings? Clear all drawings and close. Right. So again, 2 reports, different contents, right? Different information. One report says your net income for January is 40,316. The other report is saying 50,700. Again, the same source, guys. See, these are formula, right? It's coming from the same source. However, if you look at the trial balance, it gives you a better picture as to why our net income in January is only 40,000, lesser than the net income that is shown here in this portion, right? So if you go to trial balance, okay, we hid in some, right? We've hidden some columns. So this is our unadjusted trial balance, right? Straight out from our transactions, right? But we did adjustments, right? We did adjustments. That's why our financial statements was derived from this adjusted trial balance. So as you can see, different reports, different information, the same report, different information, but which one is more accurate? This one is more accurate, right? And it can easily be verifiable because it tallies back into the adjusted trial balance. You get what I'm saying? Is this making sense to you guys, or is this too much to understand? Right? So this just proves this point, right? So by skipping the crucial steps of preparing the unadjusted trial balance, making adjusting entries, and preparing adjusted trial balance before running financial statements, you risk providing incomplete or inaccurate financial statement or information. You get what I'm saying? So that's the point. The reason why you do unadjusted trial balance, adjusting, and adjusted trial balance is to show transparency within your process, right? And how you come about with the numbers presented in the financial statements. So sometimes nag-shortcut tayo, ang ending, we mess up things, right? Because of the shortcut, right? Gusto nating yumaman, nag-contractor agad tayo, tapos nagpa-interview tayo sa TV, we risk, showing off to people how corrupt we were without realizing that, right? Kasi gusto natin mabilisan, right? And sometimes we're guilty of that, right? We do shortcuts. But there are reasons why steps are there. There are reasons why there are processes to follow, because if anything goes wrong, you can always go back to your process. Which process did you make a mistake, right? And then once you have a system in place, people can just follow that step, right? Because sometimes the reason why a lot of people in even an organization, they cannot grow because the bosses, the owners, they are their own bottleneck. You know what I'm saying? They are their own bottleneck. Like, for example, if I am my own bottleneck, I could not have this class with you today or for the past 4 months. 4 months na ba? I'm imagining 4 months. Why? Because I would be so busy preparing returns. I would be so overwhelmed because I would not be able to train someone else to help me do my work a little lighter, right? Because I don't have a system in place. But if I have a system in place, I know a strategy that will work, so I can get someone to work on those steps so that I can know where to come into that. Let's say, for example, the 6 accounting steps, right? There are 6 steps in the accounting cycle. If I'm an accountant, I'm a seasoned accountant, I know the processes and I abide by the processes. I can get people to do step 1. I can get someone to do step 2, step 3, step 4, step 5. I can do step 6. Or I can not do step 6 anymore. I can have everybody doing the entire step 6. And when I look at the financials, because I know the steps and I see that something is wrong, I know where to look at, right? Let's say, hey, I have a negative accounts receivable. Why is this negative? Who did the general ledger, right? Can we go to the general ledger, check what's going on there, right? And I would say, who did the trial balance? Why was this not caught? You know what I mean? Because there is a process that if it was observed, you can train people, you can see who's accountable to what, right? And then you know how to fix. You know what I mean? But if you don't have this clear in your head, you're doing it all by yourself. You cannot make other people understand the process. You're at the risk of burning out, right? Because there would be so much on your plate, you would not know what to prioritize, right? So that's the value of processes. That's the value of systems. Sometimes we overlook that because we want to do the shortcuts. Okay, I want to be a bookkeeper or a tax preparer. I will enroll in I could imagine there's a course I look at online or it just popped up on my timeline or on my wall in FB. And he was offering a course 2 days on a weekend. So 4 hours each. And I don't know how much that costs because you have to register to get the cost, but it was a paid course. It was clearly a paid course. And it was offering a bookkeeping course with QuickBooks for 2 weeks, a total of 8 hours. And I was like, really? Right? So imagine how many days we have already, right? We're, I think, on our 3rd or 4th week. You have not even finished the entire thing yet. And some of you may be losing grip of it already because you don't see the value in it yet. But that's okay, right? But if you're seeing the value and you're here every day, what we're doing is actually establishing a really good foundation, right? When you are solid in your understanding of things, it would be easier for you to also explain that to your people that will be working with you down the line, right? So you don't become your own bottleneck. You get what I'm saying? But if you do the shortcut, so you learn from someone giving you one weekend of training and you thought you already know everything because he shows you how to do invoicing, how you do bills, how you receive the bills, without learning the principles behind it, you're learning just the surface, right? You're learning in the surface. Even tax prep, for example, a lot of people are offering tax prep for 6 weeks and then you meet once a week. So that's actually 6 meetings. How the hell would you learn, right? So I don't think that would even be effective. Like how many days have we met for the tax prep course? More than 70 days. And we meet every day for 2 hours, right? So that's equivalent to how many days? About 160 hours, right? And it wasn't even enough. There's so much more that we have not covered there. But what I'm telling you is that we have offered you guys for free the most comprehensive tax prep there is. And now we're doing it for bookkeeping because we are doing it on a more sustainable way. This is the most sustainable way. You learn the why and the how at the same time. You will never forget about it anymore. And when you're solid about your understanding, you will also be able to explain it to your people down the line, right? So that when you grow as a bookkeeper, tax preparer, tax practitioner, you be a CPA, you get to empower others as well, right? So again, you can delegate because you cannot delegate something that you don't know. Because if you delegate something that you don't know, you would not be able to check if that person made a mistake, right? You get what I'm saying? So you have to know as a leader or as someone who owns a firm that you don't need to know everything, right? But you have to have solid understanding on things that are crucial so that you can delegate this to people and so you can have more time to meet with clients, get new clients, and not doing the bulk of the work. You get what I'm saying? So that's how we grow, right? That's how we grow. And I said a lot of things already, and I promised you earlier we're gonna make it quick, but I hope I made a point, right? So that's why we do things step by the step. Sabi nga ni Ninya, di ba? Step by the step before tayo sumakses. You know Ninya? Ninya's from Bohol. She's from Tubigan, right? So panoorin niyo yung video na yan. Makes sense. She may said it differently and in a funny way, but she really made sense. Like things we need to do step by the step, right? There are reasons why there are step by the step. Right. So moving on, unless may gusto mag-add. So at the end of each accounting period, you will prepare adjusting entries, which is a step 4, right? To ensure the financial statements reflect the business's activities accurately. Once you've recorded the adjusting entries, you'll prepare the adjusted trial balance, which is the step 5, which shows the updated and final balances of all accounts. This trial balance provides a clear and accurate picture of the business's financial position at the end of the accounting period. Let's look at each step in more detail. Right, so step 4, preparing the adjusting entries. At the end of the accounting period, bookkeepers go through the process of making adjusting entries. This involves analyzing the unadjusted trial balance and performing necessary updates by recording adjusting entries. These entries, which include deferrals, accruals, and tax adjustments, can impact net income, the balance sheet, and owner's equity. In the following video, we'll dive into the adjustment process. Right, so let's play this video, or let's watch this video together.
To ensure that financial statements reflect all revenues earned and expenses incurred during the accounting period, adjusting entries are made on the last day of an accounting period. Adjusting entries are necessary to include business transactions that are not yet recorded in the accounting records. The entries made include capturing transactions that have not yet been recorded on the books that belong in the accounting period, such as expenses incurred but not yet paid or recorded, revenue that was received in advance of delivering goods or services, and adjusting for the payments of expenses, such as insurance premiums. Tax adjustments are also commonly made once every year as part of adjusting entries. The process of making adjusting entries, also known as adjusting journal entries, involves analyzing the current account balance, determining the desired balance for the accounting period's end, and recording the adjusting entry. Usually, an accountant or certified public accountant will handle the preparation of adjustments. As a bookkeeper, your role will be to implement the recommended adjustments by recording the adjusting journal entries.
All right, how do you feel about that video? How do you feel about hearing or seeing these words, deferrals, accruals, tax adjustments? Does it make you overwhelmed, intimidated? Sa mga hindi accounting ang background, do these words seem to be intimidated or mixed up? Or says it's mixed up, right? We're getting into the weeds, guys. We're getting into the weeds. And there is a reason why adjusting entries are done by CPAs or accountants is because it's complex. Let's face it, it's complex. Yesterday we talked about cash, accrual, and hybrid method, right? And a lot of times the reason why we're doing adjusting entries is because of the accruals, right? So accrual meaning accrued expenses, deferrals meaning deferred income, right? So yun yung example kahapon ni Merlita about subscription. That's an example of a deferral. Yung example naman ni Melissy about rent, that could be an example of an accrual, right? And there are tax adjustments such as, for example, depreciation. These things are not usually handled by bookkeepers, right? Because bookkeepers usually just do the recording, the posting of the transaction, but it could be yours if there's only very simple transactions within the company or the business that you're handling, right? And it may be worth knowing or understanding why these things need to be adjusted. Okay, and we'll try our very best to make it a little simpler for you. Okay, on how or why deferrals and accruals matter, right? Again, you only do deferrals or you only do adjusting entries mostly because you adopted the accrual accounting method. Okay, But there are cases wherein kahit cash basis yung gamit ni business owner, you still do adjustments. What are those adjustments? Those are called tax adjustments, right? Again, the depreciation, right? Because in QuickBooks, there is no depreciation module, right? There is no asset module within QuickBooks wherein you maintain the listing of the assets, and then it does the lapsing so that whatever is computed depreciation is posted into the books, right? Walang ganun ang QBO. Maybe SAP if you're using a sophisticated ERP or other sophisticated accounting software. But I have not come across a fixed asset module in QBO. So what happens is that if you're doing bookkeeping within QuickBooks, in the end of the year, at the end of the year, you provide the financial statements to the tax preparer, and the tax preparer would then enter those information into the tax software. The tax software will compute for the depreciation for those assets in the balance sheet, and then there may be some other tax adjustments that the preparer will make. Then pagtapos nung filing ng tax return, those adjusting entries will be submitted back to the owner so that the owner will provide that to the bookkeeper, and the bookkeeper will input that as adjusting journal entries into the books, right? So ang mangyayari, yung bookkeeper will just have to record the depreciation into the books as an adjusting entry, right? So how does that work? If we open our test drive. So again, we're talking about tax adjustments here. So here, wala kang makikitang tracking of the asset in this example, right? You know, there's no way that you can enter the asset. Like, is it a house? Is it a rental car? Is it furniture and fixtures? There may be in the chart of accounts, but there's no lapsing. So the history of the depreciation on that account, on that particular asset. So what you do, if you at the end of the year, you do here journal entry. You post the depreciation in here, and then the accumulated depreciation in here, right? And then you make a note what this adjustment is. Okay, that's the typical practice in the U.S. Setting, right? I know that because I'm doing tax preparation, and that's what we do. We coordinate with the bookkeeper at the end of the year to obtain the financials. After which, we prepare the work paper for the tax return. After that, we submit the work paper, the adjusting journal entries to the bookkeeper so that they can get the books updated. Kasi mangyayari, excuse me, I need water under John. You didn't bring me my glass.
I forgot it.
I'm sorry, guys. I talk a lot today. I've been speaking, or I've been talking since 1 in the afternoon. Excuse me. So bear with me, okay? What was I talking about? Yeah, so we do that because there is a reason, or there is a problem if the bookkeeper does not adjust the books at the end of the year after the tax preparation. Because the following year, there will be a mismatch on the financial statements, on the balance sheet. Iba yung balance sheet per tax. Iba din yung balance sheet per books. Kasi nga, hindi na-adjust ni bookkeeper yung books. So, magulo yan kapag ano nangyayari, minsan, si business owner, ngayong na year, iba yung bookkeeper niya. The following year, iba naman. Or minsan, the same bookkeeper, this year, iba yung tax preparing isa. Tapos, following year, iba naman. No? So, nangyayari yung ganyang problem because of, business owners changing professionals year after year. Kaya nga, a lot of times, business owners do not want to switch a bookkeeper. A lot of times, business owners do not want to switch tax preparers. Why? Because it makes them problematic, right? Let me just... Okay, hold on a second. Let's mute ourselves so that we don't cause trouble with the audio. There you go. Oh, what is wrong? Hold on. Right. So Maria is saying you're doing the manual Excel spreadsheet for the assets, right? For your fixed asset module. Yeah, a lot of us do that. We use Excel on the side. But again, what I'm saying is adjusting entries is very important na alam ng bookkeeper paano gawin sa books so that you don't mess with the records of the tax preparer. But again,
Yeah,
imagine yourself
yeah.
being
After that,
imagine yourself being the bookkeeper and tax preparer at the same time. O, di ba? Mas bongga yun because you already know what to adjust. And then you will just simply adjust it in the books. Right? Can you do that? Yes, of course. You're a bookkeeper and tax preparer at the same time. Di ba? Ang gaan ng buhay ng client mo. Right? Yung client mo, hindi na kailangan mang dalawa yung kausapin. Kakausapin niya pa tax accountant niya and then kakausapin niya pa kayo as a bookkeeper. Other than expensive yan, magulo. It's also going to be a headache to the client. That's how you sell your services, right? That's how you will sell your services later on. That you are a bookkeeper and a tax preparer at the same time. How awesome would it be, client, that you'd only be talking to one competent person at the end of the year because your bookkeeper and a tax preparer is me, right? You know me as the bookkeeper. I know your affairs. I know your books. I know your businesses. I know your clients. I know everything about you, right? So I can do your taxes well because you already know me as a bookkeeper, right? Why would you give it to someone else, right? When you are charged how much thousands per tax return, right? I can do it to you. I can do it for you at a much lower cost. And at the same time, you can almost guarantee. I can almost guarantee you that it's going to be a really good tax return because I already know the books to begin with, right? I know your tax situation, and I can deliver it to you timely, right? It's important that you highlight the word timely because most preparers at the end of the year they get so busy, right? And they get so busy that tax returns, like in our case, for example, mag-October na nagpe-prepare pa rin kami ng return, right? Because it really is the case. It gets so busy, right? And some businesses, some owners feel bad when their returns are not filed on time, right? Sometimes they even have to pay extra so they get prioritized, right? And that could be, again, a selling point for your services. Like, I'm your bookkeeper. I can close the books as early as January. I will make sure that by end of January or as soon as the IRS opens the e-filing system, I can get your taxes filed, right? And it would be a music to the ears of the business owner, right? Again, bookkeepers, you guys, is in the best position to sell your services as tax preparers. I will never get tired of saying that. And you can offer premium rate already because it's really expensive. Tax prep is so much more expensive than bookkeeping. That's based on actual experience. So if you guys are wanting to learn, wanting to earn more dollars, this is the right place. You will learn how to upskill yourself. All right. Ang dami ko nang sinabi. Tuloy parang kailangan ko ng water. Sorry, guys. Mohammed, you got something to say? Can you unmute him? All right. So, Jaya, when is it time to close the book? At the end, usually at the year end, after adjustments are done. Is it possible to close the books without adjusting entries? Yes, if there's nothing to adjust, right? But if you close it before the adjusting entries and it happens that there are adjustments that need to be made, if you're the bookkeeper and you have the ability to reopen the books, you can always reopen it. No problem. If it's in QBO. I don't know with other software though, but in QBO, you can always reopen a closed book. Nawiwili na din po kami makinig sa'yo. All right. Thank you. Oh my God. sometimes because I overshare, and I'm really conscious about doing that because it derails us from getting the lesson completed on time. And I also feel like I don't want to talk too much because it may be too much information, or it could be something that's nonsense to you guys. But if you ever feel that I'm oversharing or I'm talking nonsense, do let me know, and I will shut the f up. Right? But yeah, that's adjusting entries for tax, right? Depreciation usually is the reason why you have to make adjusting entries. But what about the case of deferrals and accruals? All right, so we'll take the example of Merlita yesterday, where she said there is a subscription that was paid ahead of time, right? So for example, in this example of ours, JR's bookkeeping services, let's say, for example, there is a prepayment from a client, right? So JR would say he charges $100 for bookkeeping services per month, for example, right? And then middle of the year, for example, a client of him said, JR, I will pay you $1,200 right now. So $1,200 right now for 1 year's worth of bookkeeping. All right, thank you, Marlita. Right, so that's reassuring. Now, in that case, the recording will be like this, right? So if it's cash basis, that 1,200 in, let's say, July 1 will be considered income right away, right? So the way we would record that as a journal entry, for example, this is July, why is this coming like this? So July 1, right? So July 1, oh my God, what's going on? All right, my keyboard is not cooperating. So 7/1, say for example, you receive cash, right? Cash on hand, say 1,200 or 12,000. No, 1,200 only. Again, we'll make this look like a number, right? And then you credit service income, right? This is cash basis. So 7/1 as well. This is cash basis. So this is cash basis. You have an income of 1,200 recorded on July 1st, right away, right? However, again, that bookkeeping service is for 12 months. So that's for July until December of 2025, and then January to June of 2026, right? So if you look at your report, for the end of 2025, if you're cash basis, you will already consider everything as an income for that year, correct? So cash basis, it's fine. Again, it is fine because cash basis is you receive cash, that's already income. It's fine. However, if you're on an accrual basis and you report this as income on the year that it was received, you are actually overstating your income, right? Kasi you part of that income for the next 6 months will be for 2026. You get what I'm saying? Right? You get what I'm saying? And so if you did accrual, you may consider this as income because madalawa namang method sa accrual, right? There's income method and there's ano yung isa method? Expense method, right? So if this was considered as income as of July 1 and then you want to adjust this, right? Then you can do an adjusting journal entry. Do we have an adjusting journal? You can do an adjusting journal entry right here. That would say 12/31, for example, and then instead of let's do service income. I promise I will make a point. So yung 1,200 will be divided by 12, right? Kasi 12 months. But as of July to December 31, 2024, that's only 6 months, right? So you multiply this by 6. because the remaining 6 months will be a liability, correct? So that's how it would work. 6,000 will be considered as a liability. So you will create a liability account. We don't have a liability account in our chart of accounts, so let's add that. So where is our liability account? Here. So let's create an account called, what would be the best account title for this? If it's advance payment of bookkeeping services, deferred revenue. Should we say that? Sinong gustong mag-suggest ng name? Deferred. Mali pa yung aking spelling. Deferred, right? Double R. Deferred income. Let's do it that way. And then it's a liability. Right? So AGE here would be a debit to service income and then a credit to the deferred income, right? Account. Deferred income 6,000. So if you look at your trial balance, right? See my 5,000 time indeed match because why 5,000 no? How many adjustments did we have? Okay, so let's add another account here somewhere. If naguguluhan kayo, again, it's okay. It's gonna make sense eventually. So let's just copy whatever we created in our chart of accounts as deferred income right here. Control C, copy that here. And then let's drag down all our formula. Oh God, yeah. So, ano ba itong formula na to? Bakit may 11,000? Or can I just say this minus, sorry. No, that's okay. What is this formula? I'm a bit OC now. Just bear with me. So your total assets minus your total liabilities is not zero. Why is it not zero? Is it raining? Right. It's raining really hard over where we are. But let's look into that later. So your adjusting entries are now coming off as this much, right? And let's go to our profit and loss. And let's say we're taking our profit and loss as a total, okay? Not monthly, right? Not monthly. Did we classify this? So let's look at na lang our trial balance here, or maybe our transactions in here. All right, so let's focus on the T accounts, right? So on your T accounts, you will see that there will be a change in the balance of the revenue account because of the adjustment entries, right? So let's call this T account service income. Right, and then let's look for all the service income in this transaction, right? So let's change our formatting. And then where is conditional formatting here? Yeah, here. Contains service income. All right, so that's just our guide. So all the service income we're gonna put here. So again, service income, if you go back to your normal balance, is credit, right? So all that you enter as credit will be considered income. So let's look at our first entry, this one, 5,000, right? This was the date of 116. And then you have another here on 118 of 7,000 or 70,000. And then you have another one, 3.5 on 130. This is 3.5. And then you have 500 and 1,200. $1,200, right? So without the adjusting entries, you will just have your total here as your total service income, right? So it would show a total income of 80,200. But if you made the adjustment on December 31 and say that actually not everything is income as of December 31, so I'm gonna enter the amount that was debited here in the adjusting journal entry of 600, right? You debited service income. So again, service income as an income account, having a credit as a normal balance, every time you debit it, you're decreasing it, right? So if you go back here in your T account, your 6,000 is debited, right? So you bring the total down as well. So at the end of the year, your service income is not anymore 80,200, but only 74,200. That's the adjustment, right? That's the adjustment. And who does the adjustment? Again, the accountant. But can you do it as a bookkeeper? Of course you can, right? So that's why again nga nag-aaral tayo dito so that you also become a tax preparer, right? Again, para mas malaki yung bayad ng client mo sa'yo. Right? Everyone's able to follow this. That is the deferral, right? Kaya tawag dito deferral because it's a deferred income. A deferred income is a liability account. You get what I'm saying? Everyone able to follow? And then super light na lang. We'll tackle naman accrual, right? So ito yung example na tinakal natin ngayon. Ito yung example kahapon ni Merlita, right? About the subscription naman yung sa kanya, right? But we call it service income because this example of ours is a bookkeeping services, right? Now, gamitin natin yung example ni bakit nga daw 6,000? Akala ko 1,000. Correct. So dapat 600 lang. See? Thank you, Lisa. Good job. So bakit nga ba 6,000? Kasi nga sumobra tayo. Naging 12,000. 1,200 lang. So 600 lang yan. Right? And also this one is 600. So sorry. Let's go back to our T account. So yung income na 1,200, right? The 1,200, you took half of that as a liability, right? You took half of that as a liability so that your income has reduced by 600, not 6,000. I'm sorry, Lisa, right? So good job and good spot on that. Make sense so far? So that's for the deferral. That's the income, right? Now, kung sa accrual naman, in terms of the example ni Melissa yesterday about rent, right? It could be the other way around naman, no? So kung trial balance, sabi ni JR, I will pay advance rental, right? So July 1, nagbayad ka ng rental, 1,200 din, right? Kasi yung rent mo sa, magkano ba yung rent mo dito sa, para consistent lang tayo. How much was your rent? Nag-record ba tayo ng rent? Bakit wala? Dinelete ba natin to? In one of our example? Sige, gawin na natin 100. Gawin na natin 100. or 1,000 na lang yung rent niya. Right? So 1,000 rent, right? And so on July 1, he decided to also pay rent in advance, right? So rent is an expense, you debit rent, and then 1,000 per month times 12, para hindi tayo magkamali. So that's 12,000, right? Kung cash basis si JR, he will record this as simply expense, right? And then he pays cash, 12,000. Madali lang yan, right? It's gonna be so easy like that. Okay lang yan. Well, no more adjustments, right? But if JR is accrual, on accrual basis, then at the end of the year, the accountant will make the adjustment. Why? Because when he looks at it, lagyan natin dito, payment of rental for 12 months. Advance payment na lang. Advance payment of rental for 12 months. Tapos ito naman, advance payment of bookkeeping services. Right? So if cash basis, again, no need for adjustment, right? But if accrual siya, definitely it's gonna come with an adjustment. And this is madali itong makita ng accountant, right? Kasi kung si accountant ay gagawa ng report, right? At the end of the year, he will not make sense of the numbers sa rent. Bakit yung rent ko, ang total 12,000 plus 1,000, 13,000. Tapos let's say may rent in between pa from January to July. So January to July, it's already, January to June, that's 6,000, right? And then nag-advance payment ng 12,000 ang June. So that's 6,000 plus 12, magkano? 18, right? And if an accountant would look at the profit and loss statement, magtatanong siya ngayon, bakit may rental expense na 18,000? When alam ko, 1,000 per month lang yung rental niya. You know what I mean? So kung ikaw, hindi mo alam yung concept ng accrual at bookkeeper ka na hindi nag-train sa BA, right? You will submit the financial statements as it is, right? Because you don't know you already made a mistake. Or you mistake of omission naman to, di ba? Dalawang mistake. Mistake of commission and omission, right? So ito, mistake of omission. Why? Because he did not do an adjusting entry, right? So you submitted it to the tax preparer. The tax preparer would right away look at the financial and look at the rent. He would ask you a question, he would ask a question in his head, why is my rent expense 18,000 when I know that the rent for this client is only 1,000 per month, right? Something is not wrong, something is not right. So if I'm a bookkeeper who have access to the general ledger, right? I would go to the general ledger and I would see this transaction, right? Advance payment, because bookkeeper made a note, made a memo on the transaction. So as an accountant, I look at it and say, oh, makes sense. There's an advance payment that happened in July. Do I have to reach out to the bookkeeper? Not anymore, right? Because it's in the general ledger. And again, the bookkeeper made a clear distinction of what the rent was, right? Kung hindi ko nilagyan to ng note, which is pwede naman, the accountant, the user of the financial report will have to ask, right? You're wasting his time already, right? But if you are someone who has the foresight, now when you do your things, you follow a system, you follow, you're being very thorough. You would know that hindi lang naman ikaw ang gagamit ng report, right? There will be accountant, the owner will use that. What if, iba na naman yung bookkeeper na mag-handle ng books, so hindi siya mahihirapan na i-continue yung work mo because pulido yung work, right? Transparent, well recorded, well supported, well substantiated. That's how we want to work, right? Hindi yung putyo-putyo na work na nagmamadali or yung work na hindi naman talaga natin alam but we pretend to, sabi nga nila, pretend or anong tawag doon? Fake it till you make it, right? Ang daming nangyayaring ganyan, right? But there are consequences to that, right? So if again you have a very, very good practice and you do this, you will save the time of the tax preparer because alam niya nang gagawin niya, right? What he would do is he simply just make the adjustment. You know what I mean? So what he would do is he would go to AGE and then he would just record an asset here, right? So what happens is he will create something on the chart of accounts if it's not there yet. Oh, why is this coming up like this? Okay, GOA. We'll create an asset account. Let's insert somewhere over here. So kung may prepaid assets supplies tayo, gagawa naman tayo ng prepaid rent, right? So prepaid rent would be an asset. Right? And then we'll also add that up on our trial balance. Excuse me. And then we're going to drag this formula down, right? So on our transaction or AGE, we'll say 1231 prepaid rent. Excuse me. So 12,000 divided by 12 times 6. That's a prepaid component. And then bawasan mo yung rent, right? So rent expense, you credit it. Excuse me. By the same amount, right? So if you go back to your trial balance, you would see here prepaid rent, 6,000, right? 6,000. It becomes an asset. Your rent expense, if you look at it, oh wait, AGE. So walang rent lang. So if you go to the trial balance, initially you have a record of 13,000 rents, but there is a credit to the rent. Because again, rent is an expense, the normal balance is debit, right? Every time you credit it, you're actually reducing it. So 13,000 minus 6,000, therefore your ending balance on your adjusted trial balance is 19,000. So that would be your total rent instead of the entire 13,000. Wait lang, mali ito. Bakit 19? Okay, kasi sa rent, mali yung formula natin. Kaya pala. Sa mga expenses na item, dapat debit minus credit, right? Now I know I made a mistake earlier. Because our formula should be, I'm fixing something, guys. Don't worry. It will make sense to you. So minus until other income, which is 23. And then plus the sum of your expenses. Oh God, why? Anyway, let's not look at that one right now. So let's look at rent. Okay, rent initially 13,000, right? But you took 13,000, categorize it as an asset instead, right? So that 6,000, you took it out from rent expense and you considered an asset instead here, right? So now your ending balance on rent is only 7,000. Copy so far? The same thing with our service income earlier. Our service income prior to adjustment was 80,000, but we took out 600 in our adjusting entries so that the ending balance on our rent has now gone down to 80,800. Mali naman na to. 8,200. Bakit again nag-increase? So mali. Ang ating income accounts should be kasi drinag ko lang yung formula. Sorry guys. Let's cover this. Okay, asset. So pag liability, iba yung formula natin. It should be equal to credit minus debit. right? Same thing goes with income. There, ganyan dapat. Yeah. So if you go back to rent again, service income pala. So service income, it started with 80,200. This is the unadjusted balance. We made an adjustment at the end of the year to consider the liability component. So you have 600 reduction sa income, but you also have 600 here as a liability, right? Deferred income. So again, dual transactions lagi. So net impact niyan sa income was a reduction, right? From 80,200, it's now gone down to 79,600. Again, because your income was reduced by a liability component, right? And for your expense naman with your rent initially was 13,000. You adjusted it with a 6,000, which is the asset component. So binawas mo sa rent, but you added that as an asset here. Where is our asset here? Prepaid rent. Again, the duality of the transaction, so that at the end of the year, your rent is only going to show as 7,000 and not 13,000. That's the purpose of adjusting entries, to account for the real essence of the transaction, yung matching na principle, right? Copy so far? Kasi kung hindi mo in-adjust yan, walang adjusting entry na nangyari. Kung ginamit mo lang yung unadjusted journal entry, your income is overstated and your expense is also overstated. That's not reflect the essence nga of the transactions. Making sense so far?
Yes po.
All right, perfect. So I hope I did not over-explain it to those who already understood, and for those naman na walang background at all, that made sense. Kung hindi man, at least you got 50% of it. Matakot ako kung 0%, right? So kung 10%, 20%, it's okay, right? That's already substantial. And again, things are gonna make sense as you go along, right? You will have your aha moments eventually if you don't stop. All right. So again, when at the end of the year you make adjusting entries, why is it? Because you have deferrals, you have accruals, you have tax adjustments. And if you're not a seasoned accountant, you don't need to do this because someone else will, right? Someone else will, which is your tax accountant, right? But if you're here because you want to learn and you wanna become a tax preparer too, you may have to spend time learning these things, right? So either you rewatch the recording, or you supplement your reading with another YouTube tutorial, understand what deferrals, accruals are, and why adjustment entries are necessary, or look up another resource, right? It's important that you understand this, again, if you want to be in a position as a tax preparer, because as a tax preparer, we make the adjusting entries, okay? But if you're only looking at becoming a bookkeeper for now, it's okay not to understand this thing, right? It's okay, right? But it will eventually come around. All right, Joel says 50%, challenging, but good. Amazing. JR, 40%. That's good. That's good enough, right? I'm not expecting that you guys will understand it 100%. Di naman tayo lahat dito genius. Or mayroon bang genius dito? Right? If it's your first time to encounter those things, I'm sure as hell, sorry for the word. I'm very sure that it may be overwhelming for you. And I completely understand that. Right, now let's watch this video together.
To ensure that financial statements reflect all revenues earned and expenses incurred during the accounting period, adjusting entries are made on the last day of an accounting period. Adjusting entries are necessary to include business transactions that are not yet recorded in the accounting records. The entries made include capturing transactions that have not yet been recorded on the books that belong in the accounting period, such as expenses incurred but not yet paid or recorded, revenue that was received in advance of delivering goods or services, and adjusting for repayments of expenses, such as insurance premiums. Tax adjustments are also commonly made once per year as part of adjusting entries. The process of making adjusting entries, also known as adjusting journal entries, involves analyzing the current account balance, determining the desired balance for the accounting period's end, and recording the adjusting entry. Usually, an accountant or certified public accountant will handle the preparation of adjustments. As a bookkeeper, your role will be to implement the recommended adjustments by recording the adjusting journal entries.
Right. So sabi doon, as a bookkeeper, you will just record the adjusting journal entries that was recommended or that was made by the CPA. Okay? So kung hindi man to nag-make sense sa inyo now, it's okay. Right? Eventually, it will come around. Don't be hard on yourself. Right. So accrual accounting. Revenues and expenses are reported or recognized on financial reports when they are entered or incurred, rather than when the payment is made or received. That was already tackled extensively yesterday. Matching principle. Revenues and their associated expenses should be recognized in the same accounting period. So again, accrual. And then the essence of accrual is that there has to be a matching, right? The matching of income and expenses. Income that are not earned on that period will have to be recognized on to the next period. Same goes with expenses, right? Types of adjustments. When using accrual accounting, adjusting entries help you apply the matching principle, which means you match expenses with revenues in the period when they occur, not when cash is exchanged. Adjusting entries play a key role in aligning expenses to revenues within the accounting period in accrual accounting. Again, so the principle of periodicity, right? And the principle of matching. There was a reason why we had to tackle those principles at the beginning, right? So you understand, you always have to go back. Why do we have to report it by period, right? Because you have to have a certain coverage, right? Or a certain range. What is my income as of a given period? What was my income during a particular period? What was my cash position as of a given period? Laging may qualifying yan, right? So, kasi pag tinanong ka, magkanong cash balance ko? As an accountant, your answer would be cash balance as of what date, right? So that's why the period is very, very important, guys, in accounting, right? So let's see what's in the card. Record revenues. So record revenues when they are earned, regardless of when the business receives the money. And in terms of expenses, when they are incurred, regardless of when the business pays them. So I hope by now accrual makes sense to you already. And to gain better understanding of the various types of adjusting entries, watch the following video, which includes more detailed information and examples. So start the video, select the video, play the video. For those who will watch, I'm sure that you will see the updated entries that I made. Just try to make sense how I made this adjusting entries come about, so that every time I make an adjusting entry, it gets reflected into the trial balance right away, and then my adjusting and trial balance gets updated as well, right? These are Excel formula, just so you get to appreciate how it works right away, right? Merong connectedness lahat ng mga transactions, and this is what we also do when we prepare a work paper for a tax return, right? Para wala na masyadong manual na entries. And every time I look at saan galing tong 9,000, for example, right? I can look into the formula bar. Oh, galing to sa AGE sheet, right? This was not manually entered here. Hindi siya naka-hard code, right? So hindi siya naka-hard code. I can always go back to where it was, what is the origin basically of this amount. So if I see here that it was coming from the AGE sheet, I would just simply go to AGE and see my transactions in there, right? So again, there is connectivity on the formulas, right? And if you can rewatch the video, just like Jess was saying, make sure that you also look at the running working file that we have. Whereas total in adjusted TB is not balanced. Our formula for adjusted TB is a cash on hand, and in banks that something is wrong. Yeah. Thank you, Neri and Nelia. I will look into that. Okay, no worries. So let's watch this video.
Adjusting entries reflect the actual exchange of money. and modify real-time entries to match revenue and expenses in the period they occur. They include various types of entries. Deferrals remove transactions that should be assigned to a different time period. For example, if a business
guys.
adjusting entries reflect the actual exchange of money and modify real-time entries to match revenue and expenses in the period they occur. They include various types of entries. Deferrals remove transactions that should be assigned to a different time period. For example, if a business buys a new lawnmower but hasn't used it yet, none of its value should be attributed to the revenue earned in the current period. Similarly, if a client pays in advance for a job that hasn't been completed, the revenue should be adjusted to match the actual completion of the job. Or when a business prepays for insurance costs, those expenses should also be adjusted to align with the appropriate period. Overall, deferrals ensure that revenues and expenses are properly matched to the relevant time period. Accruals, on the other hand, are the opposite of deferrals. They are transactions that include future payments or expenses. For example, a business finishes a job and sends the bill to the customer, but the payment hasn't been received yet. In this case, the revenue has been earned during the accounting period and should be matched with the expenses, such as labor costs necessary to complete the job. It's important to record the revenue and expenses in the period they occur, rather than waiting for the customer's payment to be received. Often accruals involve adjusting entries to account for wages or salaries that haven't been paid yet because payroll periods don't line up with the accounting period. Entries can also be made to account for missing or improperly recorded transactions, such as bank fees that are charged on the last day of the month and not yet recorded. Tax adjustments typically occur once a year. For instance, if the business files a return and receives a tax credit, that credit is reported as an adjustment. Another form of tax adjustment is depreciation. It is a method to evenly spread out the cost of an asset over its expected lifespan. When an expensive item, like a vehicle purchased for $50,000, acquired, the full amount is reported to the books as an asset. However, through the use of depreciation, the expense of the item can be distributed over multiple accounting periods to reflect the item's useful life and to match the expense of the item with the revenue the item is used to produce. For instance, if the expected life of the vehicle is 5 years, $10,000 will be recognized as an expense each year. The vehicle is used until the full value of the vehicle has been expended. This gradual recognition of expenses reduces the immediate impact on net profit, as only a portion of the cost is reported as an expense in each period. Remember, adjustments aim to align revenue and expenses within the accounting period to provide a more accurate representation of the business's financial health.
Right. Are we good with that? Do I need to expound on that? So it's just a summary of what we did, right? So in terms of adjusting entries, there is accrual, deferrals, and tax adjusting entries related to depreciation. That most of the time it's really depreciation. Make sense?
Yes po.
All right. I'm losing my view of the chat. So bear with me. All right, knowledge check tayo. We have 30 more minutes. So a community care service center provided a home nursing services to a client in December, but hasn't yet received payment by the end of the month. To reflect the revenue earned in December, an adjusting entry is made to recognize the revenue. What type of entry is this? So again, a community care service center provided home care nursing services to a client in December, but hasn't yet received payment by the end of the month. To reflect the revenue earned in December, an adjusting entry is made to recognize the revenue. What type of entry is this? Is it accrual, deferral, or tax adjustment? So we need to determine my service, right? But no payment was received. So, kumbaga, nag-invoice na, right? So, an invoice, basically, you recognize an accounts receivable and you recognize the income, right? So, deferral usually is for liability, right? You recognize and you receive an income at the end of the year, you adjust to recognize the liability component, right? So, this one is definitely not deferral. This one is also not a tax adjustment, but an accrual, right? So you recognize the revenue when it was earned rather than when it was received, right? So you earned the income in December. Why? Because the services was provided in December, right? Only that you have not received payment. Make sense? So it's revenue recognition of, as per Dexter, right? So we recognize the revenue regardless of when the cash was received. Make sense? And let's submit. And you were right. So to reflect work performed and billed but not paid by the customer, and yet an accrual adjusting entry is made to align the revenue earned with the accounting period in which the work was performed. All right, next example. A cleaning services business receives an advance payment of 1,200 from a customer for a monthly cleaning service to be provided evenly over the course of 1 year. The payment is posted to unearned revenue. What type of entry is this? All right, so this is a clear example of deferral, right? So a cleaning service business receives an advance payment. Parang example to natin kanina, right? The bookkeeping service revenue that was paid in advance, the same amount then. So from a customer for a monthly cleaning service to be provided evenly over the course of the year. So you receive the cash, but you have not performed the services yet, right? So instead of recording it as an income, you record it as a liability, right? Also, sa mga accounting background, di ba, may dalawang system yan. You either record it as a liability or an income, and then you adjust at the end of the year. So income or liability method. Pag sa accrual naman, expense or asset method, right? You still recall that? It is what it is, right? So example natin kanina, ginamit natin sa deferral was income method. Ito naman sa kanya, liability method, right? So in this case, we're going to use deferral, right? Again, deferral because we are recognizing a liability rather than an income at the point when the cash was received. Make sense, guys? So this is a
Yes,
liability. Pag deferral, just put it in your head, it's likely a liability, right? So let's submit. And that's right. Deferral entries remove transactions that belong to a different time period. As the 12 months of prepaid services has not been performed, the money should not yet be recognized as revenue and should be deferred, right? Next example, a pet store purchases a piece of equipment at a cost of $10,000. It has an expected useful life of 5 years. The company posts an adjusting entry that debits the depreciation expense account $2,000 to recognize the portion of the equipment cost to be recognized as an expense for the first year. What type of entry is this? Right, so this is an example of a tax adjustment, right? So it's not an accrual, not anything to do with income or a liability. Rather, I would say a recognition of the use of the asset as a contribution to the income, right? So useful life of 5 years, that means the asset will be productive for the next 5 years. And so a portion of that should be allocated as an expense on the 5 years. Kasi nung una, binili mo yung land, it's an asset, right? Or sorry, equipment is an asset, right? But over time, that asset will become an expense. You get what I'm saying? So you accrue, you record an expense over time. And so this is a tax adjustment. And I believe we have already made emphasis on this on a great length earlier. So let's hit submit. And yeah, right. Depreciation is a form of tax adjustment that ito naman, mali na naman to. Depreciation is a form of tax adjustment that evenly. What doesn't make sense, right? Depreciation is a form of tax adjustment that wala na tong A, right? So depreciation is a form of tax adjustments that evenly spreads out the cost of an asset over its expected lifespan. Right? So may proofreading issue talaga to si QBO. Right? Do you guys agree with me? Makikita niyo yung mga mali-mali ng mga ano. Wala din ba dapat yung evenly? Tama naman to. Evenly spreads. Evenly is the adverb, right? Evenly is the adverb because evenly means the spread is even, right? Even meaning it's equal for each period because it can also be spread, right? But how do you spread it? You spread it evenly, right? So grammatically, correct yung evenly, yung A lang yung i-remove kasi it doesn't make sense. Alright, diba? Nag-grammar classes na tayo. Charet. But makers does not use evenly. Yeah. Depends. Makers is not, depends on the asset, right? Depends on the asset. Makers has its own computation based on, kasi ikaw, JR, that you're doing tax prep already. Don't worry about depreciation method. We're gonna cover that on the tax prep na side. Okay. For simplicity's sake, we're using straight line depreciation. Kasi guys, prelude to depreciation, may different types of depreciation, right? In accounting class, there's straight line, there's double declining, there's declining, there's sum of years life and everything else. So does in US tax, right? Because IRS has provisions on how to depreciate assets. That's what you're talking about, maker, straight line, basta marami, right? But let's not worry about those for now. Let's talk about depreciation as if we're using straight line, okay? Just so not to complicate, right? Again, I would want you guys to think on a step-by-step basis. Let's not try to complicate things at this point because our audience are not necessarily experienced in tax, right? So for now, when we talk about depreciation, let's talk about straight line muna, okay? So start from the unadjusted balance. Ano ba to? Now, so step 5 na pala tayo. This is the last for this module. So step 5, prepare adjusted trial balance. To ensure accurate financial records, you will record adjusting entries in both the journal and the ledger. Start from the unadjusted balance. Begin with the unadjusted balance. Make sure each account has a current balance in the respective accounts. Make the adjustments, marking all clearly. Add the adjusting entries. All entries should be clearly marked to indicate the affected accounts and the amount involved. Now prepare the adjusted balance. Once the adjustments have been made, prepare the adjusted balance. This balance reflects the final balances of all accounts at the end of the accounting period, including the adjustments. So ito yon, right? Saan na ba yung ating work? Ito pala, nilipat ko. 1 second. Kasi I'm kind of pissed off. There's something wrong with the formula. Right? Like there's something wrong with the formula here. This should be 0. I'm kind of bothered about this, but I don't want to spend time on this one right now. I'll figure it out later, or maybe someone can figure it out. Look at the formulas here, play it around, play around it, and see. Let me know if where have I gone wrong, right? But just to demonstrate what was in the resource earlier, so this is your unadjusted trial balance, right? And then this is your adjusting entries. And then after taking into account all the adjusting entries, you have your adjusted trial balance, right? And this is what you use to prepare the financial statements, right? So you summarize all your adjusting entries, group them into account, right? That's why we use the sum if formula here because we sum all the debit balances and credit balances on the adjusting entries or the adjusted accounts. And so whatever debits we have, we add them all together in the adjusted trial balance. Whatever credits we have, we add them all together too, right? So, okay naman tayo. Balance naman yung trial balance natin sa adjusted. Ito lang yung hindi ako comfortable. Why is not 0? Anyway, that's beside the point. But this is how it looks like, the adjusted trial balance, right? I hope it's clear to you guys. So let's try it out, the QuickBooks way. Creating the adjusted trial balance. Frank's Car Detailing Studio has reached the end of their accounting period. You now need to record the end of period adjusting entries and preparing the adjusted trial balance. In following activity, use the drop-down menus to select the appropriate response in each case to complete the entry. When you are finished, select Submit. All right, so to start with your work, review the unadjusted trial balance for Frank's Car Detailing Studio we saw earlier. So what does it do? Accounts, so debit, this is what we did, right? 4,603.46, so this is balance naman. Now, during the accounting period, the business purchased a steam cleaner for detailing and used it for several jobs. The steam cleaner was financed with a note payable with no money down. The expected useful life for the steam cleaner is 5 years. The accountant provided you with the following journal entries to make on behalf of the client. So entry number 1, purchase of the steam cleaner. Record the purchase of the equipment with the following entry, increasing both property, plant, and equipment, and notes payable for $2,799. So the transaction journal. So debit to the PPE equipment, the PPE account. So PPE account is an asset, right? So with that, if we're increasing the asset, do we debit or credit? Do we debit or credit? Debit, right? And so the
Debit.
$7.99. So $27.99, and so we put NA here, right? Because it's not applicable. Next, notes payable. So notes payable is the credit, right? Because it's a liability. The credit is the normal balance. So since we're increasing our notes payable, we are not debiting it, rather we are crediting, correct?
Credit.
Makes sense?
Yes.
All right. So let's submit, and we should be correct. So to record the purchase of the steam cleaner, you will debit property, plant, and equipment, or an asset account, and credit notes payable, which is a liability account. All right, let's continue. Now that the assets is on the books, the next step is to record the depreciation for having used the asset in this accounting period. With a useful life of 5 years and straight line depreciation, again, this is the straight line depreciation method, the accountant has determined that the journal entry you should make is to record $559.80, or 1/5 of the value of the steam cleaner. So that's 1 year out of 5 years, against both the depreciation expense account and the accumulated depreciation account. So entry number 2, first year depreciation. Again, this is a tax adjustment, right? Not an accrual, not a deferral, but a tax adjustment. So record the depreciation of the equipment with the following entry, increasing accumulated depreciation and recognizing the first year of depreciation expense of $559.80. Right, so the transaction journal, account name, depreciation expense. We already know from the word depreciation expense that it's an expense account, right? Expense account has a normal debit balance, right? And you're increasing the value of depreciation, therefore we're going to be debiting the account, correct? By $559.80. Agree? And then should be an A, right? An accumulated depreciation is a contra asset account, meaning contra asset is that you credit the account, right? Contra asset, because an asset is a debit account. Everything that's contra is opposite it, right? So if it's opposite, then we are increasing the account. Therefore, we're not debiting it, rather we are crediting the account, correct? You guys agree with this? This one makes sense, right? Again, if you are thinking of like you're guessing, right? Don't ever guess. Make sure that you understand the why of the transaction. You look at depreciation expense, you know depreciation expense is an expense account, and if I debit the account, I'm increasing the account, right? And then accumulated depreciation is a contra asset. It's opposite, the behavior is opposite the asset, right? So if its asset has a debit account, whatever is contra would have the opposite way, right? That's how you frame your answer, right? Not just following, like making a guess. You have to know your why, right? Because if you understand the why behind what you're doing, you can explain it to whoever. right? Sometimes we do things because we understand them. We thought we understand them, but we really don't, right? So when someone asks us, we cannot explain why you do it, right? I do it because that's how I'm used to do it, right? But you don't know how to explain it because it's not solid in your head. You don't understand the why, the principles behind what you do. You get what I mean? So again, it's very, very important that we know the principles behind what we're doing, because that's how we can grow ourselves. We grow ourselves by being able to multiply it to others. We're able to multiply it to others when we are able to explain things to others the way we understood them, right? So we submit, and that is correct. Now, knowledge check. So after you run the unadjusted trial balance, you must go through step 4 of the accounting cycle. During this step, you will A, debit accounts payable, or adjust the cash accounts, or prepare the adjusting entries. So after you run the unadjusted trial balance, you must go through the step 4. So step 4 is the adjusting, right? So prepare the adjusting entries. Agree? All right, everybody is in agreement. Let's submit. And that is correct. So during step 4 of the accounting cycle, accountants or certified public accountants will prepare adjustments and make recommendations. Bookkeepers will need to record the adjusting entries. Right? So wag niyong kalimutang i-record yung mga adjusting entries. Right. So what would be an effect of not depreciating a significant tangible or physical asset over its useful life of the asset? Select all that apply. So if hindi daw tayo nag-depreciate, what would be the effect? Right? So first, failing to depreciate the asset would mean its value would remain unchanged on the balance sheet, potentially leading to an overstatement of total assets. Is this correct? Yes, right. So overstated yung asset mo because you have not been depreciating it. Next, by not recognizing depreciation, the financial statements may not reflect the true profitability and financial performance of the business. Is this correct? Sabi ni Jeneline, all daw. So this should be correct if all. But let's read the rest of the 2 points. Neglecting to account for depreciation may result in an inaccurate tax liability calculation, potentially leading to underpayment of taxes for non-compliance with tax regulation. This is very correct, guys. And this is why we also study depreciation, right? Because depreciation, as you know by now, is a tax strategy, right? A lot of business owners, lalo na yung malalaki yung mga businesses, they use depreciation to create paper losses, right? To create paper losses, and they have losses, they don't pay taxes, right? Later on, when we tackle about business return, we'll talk about Section 179, bonus depreciation, and those things we ought to know because, again, they have significant impact on the tax liability of a taxpayer, right? And when you know those things, you are, again, valuable, right? And sometimes, if you're applying for a job, right? If you're applying for a job as a taxpayer, minsan natatanong to, right? And if you already know in the back of your head about depreciation, you may be able, this may be a gateway for you to get a job as a taxpayer or as a bookkeeper, or could be both, right? So it's important to know this, and we will have time to also dig deeper on depreciation as we go along in our lessons, okay? Next, by not recognizing depreciation, the business may not be properly accounting for the wear and tear of or of the asset. This can lead to poor planning for of the asset in the future. So this is also correct. By the way, guys, correct me if I'm wrong. This is read as wear and tear, right? Not wear and tear, right? Kasi kung tear, di ba luha, right? Tear, luha. But if it's wear and tear, that means the wear and tear, like, I don't know how to better explain it. Like maluluma, right? Maluluma yung damit, maluluma yung asset. It's a normal wear and tear, right? Pagkalaspag. Wow, grabe naman sa Erwin. Anong nalalaspag, Erwin, ha? Right, so that's also correct. So by not recognizing depreciation, the business may not be properly accounting for the wear and tear or obsolescence of the asset. It can lead to poor planning of the replacement or upgrade of the asset in the future. So tama si nung nasabing all of the above kanina. Basta may nagsabing all of the above. Lahat kayo sabi niya all of the above. So let's hit submit. And we are correct. Right? Ha?
Gamit na kayo.
Last pag is gamit na gamit. Grabe naman. Next, once you have completed all adjusting entries, you will complete step 5 of the accounting cycle, which is the preparation of, madali na lang to, adjusted trial balance, right? So hindi pa financial statement, step 6 pa yon, right? Hindi rin unadjusted because unadjusted is step 3. So it should only be A. So once you have completed all adjusting entries, you will complete step 5 of the accounting cycle, preparing the adjusted trial balance, which is a listing of the ending balances in all accounts after adjusting entries have been prepared. Right. Hinihingal na ako, guys. Summary of activity. Setting the scene. Your client needing supply store has reached the end of their accounting period and needs your help preparing the unadjusted trial balance, recording the adjusting entries, and preparing the adjusted trial balance. Following question. Sally, the owner of the knitting supplies store, says, we sold 500 worth of we sold 500 worth of gift cards this month and need them to be properly recorded in the books before we run our financial reports. The accountant needs our unadjusted trial balance Tuesday to prepare the adjusting entries. Now, prepare the unadjusted trial balance. To begin, you need to prepare an unadjusted trial balance. This document gives you a snapshot of the status of the accounts before any adjustments, serving as a starting point for the adjustment process in the accounting cycle. So, mag-prepare na tayo ng unadjusted trial balance. So how does this look like? Checking. So parang kanina lang to, right? So 4603 is a credit. Wala namang missing. So what we do is 4603, we subtract cost of goods sold, we subtract savings. That should result to how much? You guys, sino mabilis sa math? Wala si Carlo dito sa bookkeeping kasi malali na lang sa kanya itong bookkeeping eh. Tax prep, babalik yun. Or nandito ba si Carlo? Alright, sinong may sagot? Aba, ang bagal niyo sa math ha?
3905.
3905. Okay, good. And then total, of course, is 4603. Right? So 4603, let's hit submit. That is correct. Great work. You have completed the activity. Accounted input. The knitting supply store sold gift cards. That is deferred revenue. And we need to get that onto the books properly. I have provided you with an adjusting entry for the period. So recording now the adjusting entry. The accountant provided you with the following journal entry to make on behalf of the client. Record the adjusting entry to reflect the deferral of the revenue by decreasing gift card revenue and increasing deferred revenue by 500. So, right. So sales revenue. Sales revenue, babawasan daw yung sales revenue, right? Because magde-defer, right? So kung ang sales revenue is a revenue account or income account, ang normal balance ay credit, if we want to bawas the revenue, we're going to be debiting, correct? Agree? So we're going to make debit the 500 because we are going to be reducing the sales revenue account, correct? And then we are going to be recognizing a liability. So deferred revenue is a liability account. The normal balance is credit. So every time we increase a liability account, we credit them, correct?
Yes.
So that should be credit to 500 for deferred revenue and A for sales revenue and A in here as well. You guys agree with this?
Yes
Yeah.
po.
All right. Thank you. So great work again. We still have 4 minutes. Let's make the most out of the time. So run the adjusted balance. Now that the adjusting entry are in place, you are ready to run the adjusted balance and see the how. Ito na naman. So see the how daw. Nababother na talaga ako dito, na? Now that the adjusting entries are in place, you are ready to run the adjusted balance and see how the entry has impacted the accounts and whether the left and the right side of the accounting equation are still in balance, right? So this is the adjusted trial balance, 4603, the same thing that we do. You total the debit, wala namang missing information. So to obtain the missing information, we just have to work back. But may dalawa, so the work back would not work. So let's go back to the entries here. So the trial balance, deferred revenue, alam na natin kasi nakita natin yan dito, di ba? Magkano nga yung deferred revenue? Ay, wala, hindi ano. Sino nakaalala? So deferred revenue,
500 po.
and then this one is also 500. Or how much was the sales revenue?
39.
39. Okay. Nakakasunod, right? This was from earlier. Submit. That's correct. Great work again. So reflection. How have the numbers for the business changed from the unadjusted balance? What kind of impact might have this on the business? Take a moment to consider how adjusting entries might affect the financial statements of the business. So did you consider adjusting entries affect profitability, the financial statements, and can have the tax implications on a business, right? If you don't depreciate, right? If you don't depreciate the asset, it would cause an overstatement of income, right? Kung may overstatement ng income, may overpayment ng tax, right? And you don't want to do that, right? You don't want to, as much as possible when you're preparing tax return, you want to make the taxpayer pay less tax as possible, as legally as possible, okay? So don't make a mistake of not doing depreciation. Depreciation entries reduce profits by recording additional expenses, o sabi dito. While recording prepaid expenses as assets increases profitability. Consistency in applying adjustments is therefore crucial for reliable records and financial statements. Marami pa ba to? Complete the content above before moving on. So continue natin to next time. After ng reflection, we'll continue tomorrow answering this and hopefully closing the loop on the accounting steps 3, 4, and 5. Okay, almost na tayo done sa first level. Okay pa tayo so far? So
Yes.
we have already encountered accrual, deferral, accounting entries. Again, those are important to have a clear picture of the financial statements. Without making those necessary adjustments, you may run the risk of misrepresenting the financial statements. It could be the financial statements and the balance sheets are overstated or understated, right? In many cases, when we are preparing taxes, we want to present as low income as possible for the client, right? So that is why you have to recognize the necessary expenses that are legally plausible, as well as the depreciation, right? And then if there are income that are not earned during that period, you consider that as a liability, right? Wag nating i-inflate yung income, because the moment we do that, we are making the taxpayer pay more taxes than he or she should, right? And that's where our value comes into play, right? Hindi lang tayo gumagawa ng how, we know the why, so that then we can add value to the client that we are working for. Again, that's our purpose at B. Not just become a bookkeeper and a tax preparer that we learn in weeks. We learn it and we continue to learn it. Like I've been doing taxes for 5 years and I'm still learning, right? That's why I don't want you to call me sir, mentor, coach, or whatever, because I'm also still learning in the process, and there's so much more to learn. I know I have not even maybe reached a fourth on my class, right? And so I hope that you also have that same mindset, that you continue to be that you continue to be hungry in your quest for knowledge, because again, the more that you equip yourself with knowledge and the necessary skills, the more that you become valuable. And we become valuable, that's when you start to earning the amount that you want to earn, right? It's not going to happen overnight, guys. Right? There are times that we earn so much in a short period of time, but that's not going to be sustainable, right? So you want something that's sustainable, something that's replicable, something that would later on prepare you to become bigger and, become more impactful in the community that you are in, right? So this is how we learn with Borderless Accountants. We want to learn the how and the why, because now once we learn, we can train somebody else the way that you've been trained. You get what I'm saying? So I guess that's about it for today. 2 minutes over time ako, but I hope you learned a lot today. And that was not so much for some of you guys. If it was, then that's fine. Just assess yourself where you are at, and just don't stop. You know, everything's gonna make sense as we go along. May mga aha moments din kayong encounter as you continue with your journey to become the best tax preparer or bookkeeper there is for the US market. Right. So having said that, thank you guys again for tonight. I'll see you guys again tomorrow, same time, same Zoom link. Enjoy the rest of your night. Bye for now.
Bye. Good night. Thank you.
Thank you. Bye.
Thank you,
You,
sir.
Chris.
Thank you,
Thank you,
Paulo.
Chris.
Pleasure
Thank you,
po.
everyone. Good night.
Thank you, Chris. Good night.
Thank you. Happy
Guys, meron bang
Thank you,
review today?
Chris.
Pleasure po.
Thank
Ma'am,
you.
Thank you
Happy
so much.
weekend, everybody.
meron pa tayong review today.
Yes po. Meron.
All right. All right. I
Sipag
love that.
kami. Masipag kami.
Oo nga eh. Hands off to you. I really am so excited. Ma'am Sean, sabi ni Kelly, meron daw kayong kapatid na nasa US.
Ano, hipag? Hipag ko.
Ano lipat?
Kasi, yung mister ko,
Hipag.
tsaka,
Hipag is brother-in-law?
hipag ba yun?
Sister-in-law.
In-encourage ko siya para magkaroon ng IFIN. Nag-aaral siya pero replay kasi yung time niya hindi iba.
Okay lang yan. Okay lang yan. Encourage mo siyang mag-Ethan para makapag-prepare kayo ng maraming tax. Marami kayong matulungan na.
Sinabi ko
Lalo
nga
na
sa
sa
kanya.
inyo. Ang daming doon sa inyo, tax prepare already.
Ang daming magagaling na.
Oo. I am happy, I'll pray for you na makapag-Ethan kayo this year. Kasi alam ko, yung IFIN, ina-apply yan mga fourth quarter ata. Kasi may training yan, may kailangan kang i-comply before the IRS for you to get an IFIN. Tapos pag nag-lapse na, next year ka